Okay, peeps, welcome back. So today we're going to be talking about how this new YieldMax fund could pay as much as 35% with JPMO. Let's get it. So as you guys know, recently YieldMax has come out with some new funds that they have offered onto the market. You have Coney, MSFO, DISO, Zomo, which is the ExxonMobil oil company, and then you have JPMO, which is in the financial sector of the S&P. And JPMO is based on JP Morgan Chase. So we're going to go over the technicals here. As you can see, it is available for purchase. It just came out. So it's fair to assume that the market cap is going to be relatively small, maybe a couple million or something. It's not that large yet. It takes time for the liquidity pool that they have to increase, as you guys have seen with Tesla. So if we look over on the right, you guys can see on the weekly time frame, I have some stuff drawn out here. You can see a clear upward channel, which is a bullish trend until there is a close below the bottom of the trend line, which would indicate a trend reversal. I have some support zones here for you guys that are looking to buy at support. A good support zone would be 142 to 148 for those of you that want to own the underlying stock. And below that would be basically $94 to $100. And again, this will reflect in the price of JPMO because it mirrors the price of the underlying security. And the major sell zone up at the top would be roughly around 165 to 172. So how long has JPM existed, the actual stock itself? Well, I'm going to scroll out to a huge time frame here. Okay, we've never looked at this before. This is the 12-month time frame. So this is basically pretty much just 1 year candles. As you guys can see, the very first candle that printed here on TradingView was in 1969. So this stock has really been around for a long time. It's going on almost 60 years now. And if you guys see from the absolute low all the way up to the top, you would have made a ridiculous 31,000% gain, or about a 300x on your money if you had bought JP Morgan Chase when it was basically just a penny stock. So this pretty much goes over the technicals on the chart where you guys would be potentially looking to buy and sell. If you did want to buy and sell, or if you just want to hold for the dividend, that's fine. So let's go over the next metric here. So I got JP Morgan Chase, the actual company, pulled up here. You guys can see that it's a bank that's based in New York, was incorporated in Delaware. It's the largest bank in the United States, which is true, and the world's largest bank by market capitalization as of 2023. So that's for it's basically bigger than any bank on the entire planet. That's a big deal. So you got all your metrics here. Jamie Dimon is the CEO. He's been the CEO for quite some time. Now, if we go to the website of JP Morgan Chase, let's take a look at when this bank first existed. Or was first created, I should say. The bank first came into existence, or the origins of the bank, in 1799. So basically, this bank has pretty much been around since, or at least the origin story of it has been around since pretty much right around the time that the founding fathers created the United States that we all live in. So this is basically about 225 years of history. I could go through it all with you guys, but it would take a really, really long time for me to read all this for all of you. As you guys can see here, it pretty much trails different timelines. So you got the 1800s to 1850s, 1860s to 1910s, 1940s, 1970s, 1990s, and 2000 to present. Just a quick note, in 2000, this is when JP Morgan and Company became JP Morgan Chase, when they merged with Chase Manhattan Group, or corporation, that was back during the dot-com bust. So you guys can see all that. You can see that they started mobile banking in 2010. They started financing GM in 2010, supporting veterans in 2011, supporting women's movements in 2013. So they really have their hand in a lot of jars here. As you guys can see, they're pretty well established in a lot of different sectors. This would be for African Americans. So this was started in 2019. So JP Morgan is one of the world's oldest and largest and best known financial institutions, and they are huge. They're literally the biggest. So we can go over another metric here. You guys can see the biggest banks in America, from Chase Bank to TD Bank. These 10 institutions are the largest banks in the US. And I'll leave this in the description for you guys as well, so you can read into it if you want to. But basically, from the largest bank to the smallest bank as of March 31st of this year, you got JP Morgan Chase, Bank of America, Citibank, Wells Fargo, US Bank, Truist Bank, PNC, Goldman Sachs, Capital One, and TD Bank, which TD Bank is basically more or less TD Ameritrade. For those of you that trade out there on TD Ameritrade, you know what I'm talking about. So this is basically largest to smallest in terms of market capitalization. JP Morgan Chase, again, is the biggest in the United States. They have 3.3 trillion in assets, 4,700 banks, 15,000 ATMs. And the next biggest one is 2.5 trillion, which is Bank of America. They have 3,800 bank branches and doesn't really say how many ATMs, but I'm sure they have a lot. And then you could just keep going down the list. You guys can see pretty much all of the metrics here for yourself. Now, let's get into the yield piece. So, as you guys can see here on the YieldMax website, I'm on JPMO. Give me a second on that. So, JPMO. So we're going to go back here and look at these. You can see that these new 5 funds that they came out with, basically, there's pretty much nothing going on here. Like, they don't have a yield yet. So my guess is they're currently writing options contracts on these, and the yield will pay out either next month or in November. JPMO, my guess would be in November. But if we click on it here, you guys can basically see that, well, they don't really have a distribution rate yet, okay? But it does pay monthly. Again, it's based on JPM or JP Morgan Chase. And you guys can see that the net assets is really small. It is roughly about $3 million. I have not checked to see which brokerages these are available on. Just so you guys know, there is NVIDIA, Aptly, and OARC has been added to M1 Finance. If I was going to find this fund, though, I would be wanting to look on Robinhood or Webull. So the shares outstanding is 150,000. That's probably going to move up over time because, again, you know, if they want to have more investors investing to be able to open more contracts, they need more liquidity in order to open those contracts. And the more contracts that they make from the money that they get from the investors, the more they can pay out in dividends to more people. So we'll go ahead and move on to the next metric here that I was going to talk about. So this is the dividend history of Tesla. As you guys can see, currently the dividend yield is about 68%. Or if we actually go back here onto the YieldMax website, you can see that it's actually decreased a little bit. So we'll just say 48%. So if we take Tesla's most recent payout, which oddly enough is actually not showing up here, I think that's a bit strange. Usually the NASDAQ.com is a little more updated than this. But you guys can see the most recent payout was 58 cents, roughly about 59 cents. So why am I bringing up Tesla? Well, we're going to do a beta comparison between Tesla and JP Morgan to kind of get a rough idea of an estimate of what the yield could be for JP Morgan Chase on average going forward over time. Okay. And again, the beta is basically it is the stock equivalent to implied volatility for options. So implied volatility is for options. Beta would be for stocks. Volatility would be for futures, so on, so on. You guys get the point. So if we look at Tesla on the Yahoo Finance tab, you guys can see that the 5-year average beta is 2.09%, which indicates that it's roughly about 2 times more volatile than the S&P or the SPX. But if we go over to JP Morgan Chase, you guys can see that the beta is much smaller. Again, the larger a company is, let's just put it like this: the more capital that a company has, the larger the market capitalization, the lower in general the beta is going to be. Like if we take a look at Apple, for example, Apple would be another good example of this. You guys can see that the market cap is 2.73 trillion, so it's actually pretty much almost on point with JP Morgan. And the beta indicates that it's only a quarter percentage point more volatile than the market. But if we take a look at something like, say, Coinbase, you guys can see that the market cap is way smaller than JP Morgan and Apple, but the beta is absolutely insane. It's almost 3 times more volatile than the market. So I'm going to go ahead and scroll back here real quick. So basically what we're going to do is we're going to say that because Tesla's volatility is 2 times that of the market and JP Morgan's volatility is roughly half that of the market, that the percentage yield and the amount paid out per share would be roughly half that of Tesla. Okay. So if we base everything on that, we'll say that Tesla is at 58 cents. We divide it by 2. So there's a potential there to make 29 at the low, on the low end, 29 cents per share with JP Morgan Chase or JPMO. Again, the current share price of JPMO is about $20.15. From a technical perspective, I would, since JP Morgan is sitting at this support level, but it looks like it's going to break down from the channel, what I would do if I was buying this right now basically is I would buy a little bit at the support level. And I would just be looking to DCA in either way, whether it goes up or down, because if it breaks below this channel, usually when it goes down to roughly about the bottom of the channel, which would be the next support zone of the start of this channel. So you're talking about a $50 drop here. And nobody really wants to be the guy buying at the top, right? So that would be that for JP Morgan. You could be looking at 29 cents. And the yield would obviously be roughly about the current of what Tesla is, so maybe a 24% yield. Now, where I came up with a 35% yield is basically because if we go back to the NASDAQ.com, you can see that this yield that they have here is based on the previous distribution for Tesla. And as you guys know, I've stated before that I think the average payout for Tesla is going to be somewhere between 80 cents to $1 per share, maybe closer to 80 to 90 cents, which means that the yield here would be accurate going into the future. So this is about a 70% yield. Half of that for JPM, since the beta is half of for JPM is half that of Tesla. We will basically say a 69% yield, rounded up, divided by 2 is about 34.5% yield. And if we base JP Morgan, the YieldMax version, paying roughly about half the average of Tesla, you get about 41 cents a month. So if you bought 100 shares of this at 41 cents a month, you would get $41 a month of income. If you bought 1,000 shares a month, or 1,000 shares in general, not 1,000 shares a month, if you can do that, well, hey, hats off to you. You get about $415 a month. If we go back here on our numbers, you can see half of the most recent payout. The lower one is about 29 cents. So 29 cents times 100 shares, you get 29 bucks. 29 cents times 1,000 shares, you get about $290 a month. Now, if we take that and compare it to something else that's really high yielding, let's choose SVOL as a good example here, okay? SVOL is roughly about, if we go back here and we take a look at the price of SVOL, I have not made a video on this, just so you guys know, this is fresh content. It's about $23 a share. You can see that they're paying 30 cents a share right now. So, I mean, on the low end for JP Morgan, you'd be making about the same as SVOL, but the difference is you would save yourself roughly about $3 a share in terms of your purchasing power. So basically, if we're to say you bought 100 shares of SVOL over 100 shares of JPMO, you would be paying about $300 more to acquire those 100 shares of SVOL, and you'd get about the same payout. But if you were to buy JPMO and you were to get the higher yielding amount, which would be 41 cents, you would not only have to basically pay more for SVOL, but on top of that, you would get a lower yield. So it's kind of a trade off. We'd probably want to see some data on this first, see what the actual dividend amount is. But just so you guys know, if you owned 100 shares of SVOL, you'd get basically at the current rate about $30 a month. And again, this video is not about SVOL, but I would just want to bring it up to give a comparison. As you guys can see here, the dividend history has been pretty accurate, pretty consistent over time. Whereas something like Tesla has been relatively all over the place over time. But again, different product, different beast. So anyways, hope you guys enjoyed this content. Please like, comment, and subscribe. Let me know in the comments below if you guys plan on picking up any JPMO, and I will see y'all later. Peace.